What's going on, guys? So in this video, I'm going to be talking about the company Altria and giving my overall investment thesis and, my breakdown of how I analyzed the company and, kind of the most important things I think, good or bad, you should be paying attention to when looking at this company. And also my overall opinion on, what's going on with this space. And do I think that companies like Altria have really anything to worry about, in the future? And can they expect to be even more profitable than they currently are? I do want to say first off, though, I do apologize to, anybody who said that they wanted this video to be done on the whiteboard. I actually did start doing it over there, as you can see. However, then I found out that none of my lavalier mics were actually working with my audio recorder efficiently. So when I started to, go through and play back some of the scenes, I noticed that a lot of my mic sounds were getting very wonky. And I cannot tell if it is currently my lav mics themselves or if it's my audio recorder's input. So I'm going to have that figured out. Hopefully it's not the recorder because I don't want to put down another couple $100 on this. So until that gets straightened out, I'm just going to be focused on, videos here on the computer. And so I know that you guys really wanted it on the whiteboard, but I figured, some content was better than no content. Anyways, that ramble aside, let's jump into the video. So my overall thesis on looking at Altria and other tobacco-related companies as an investment right now generally focuses on the assumptions that I think that as a whole, the market is, either fairly valued or overly valued, at least the companies that the average person thinks about when they think about the stock market. So you have your FANG stocks, you have all of the mega cap tech companies, and people generally neglect small and mid-sized businesses, niche industries, or they neglect businesses that are in, unsatisfactory industries, such as, anything that has to do with gambling, anything that has to do with smoking cigarettes, waste management, everything that no one really wants to be like, proud of, to say that like, yeah, I'm a part of that, or like, yeah, I was putting money into that, things like that. Like you don't want to talk about, say, what's going on with Altria. You want to talk about like all the new tech that's coming out with Tesla or Facebook or Google, things like that. So I definitely think that when you look at industries outside of what's really popular and what people are focused on right now, it's easier to find deals. Not saying that there aren't deals, and not saying that the companies in say the high growth spaces aren't going to perform really well. I think it's just nice though to diversify within the broad topics of stocks there are. Mainly, the fast growers, the slow growers, things like that. And so I thought it was relatively easier to find, stocks trading at somewhat of a value, a fundamental value that is, in these types of spaces. And so I found Altria, and I thought that there's a couple of interesting things to think about when looking at Altria as an investment. So at an overview, you can kind of look at Altria, just at a quick glance, and you see that their PE is currently under 14. Their dividend yield right now is a little bit over 6% on their yield, I believe. They have extremely stable cash flows, and these cash flows are backed by extremely strong pricing power because, as we all know, the majority of smokers will buy their pack of cigarettes and their brand that they like, regardless of what the price is. Obviously, they're going to complain about it, but studies have shown that even increasing the price of cigarettes doesn't really deter sales that much. The only thing that's really deterring sales is, education of the, all the health risks that are correlated with smoking. However, I always think that there are going to be smokers. I think there are going to be new smokers. I think the smokers that are currently smoking in large are going to continue to smoke the rest of their lives. So I personally think they have a very niche market that they can control very well when it comes to pricing, and I think that is something very unique about the tobacco space and Altria to begin with. It should also be noticed that they have extremely high margins, so over the past, say, couple of decades, smoking has actually gone on a decline, at least as the amount of individual smokers there are here in the United States. However, they have extremely high margins, and, between the high margins and their pricing power, they've actually been able to, increase their EPS, over the past couple of decades. And that has allowed them to, increase their dividend, increase, all of the return on investment for shareholders. And they have been able to outperform the S&P, over the past, say, 30 years by quite a substantial margin, especially when you reinvest those dividends. So I think overall the company is relatively stable in that regard. The company is also relatively diversified, even within, say, the vice sector. They do have a small wine business. It's a relatively negligible part of their internal revenue. However, they also do own about a 10% stake in the company Bud. So obviously, they're getting revenue from those dividends, and also so assuming that either smoking has an increase in purchasing, or whether beer has an increase in consumer focus, this company will do considerably well, banking off that. And something that I do want to focus on is that the company is, when you relate to the company as, say, like an overall lifespan of a company, you have the startup, and then they become an extremely fast grower, then they become a mature company, and then they eventually become a dying company. And Altria is pretty obviously in a dying company standpoint. So, the company isn't, its years of rapid growth are over. It's able to, because of its nature of the industry, it's able to, grow at a reasonable rate, but it's not going to be able to grow internally that organically, and it has decided to use the majority of its money to repay shareholders because, it's going to make the amount of money it's going to make. I think it's relatively easy to see the future of how much money this company is going to make over, say, the next 5-10 years. And I think that management has kind of been accepting of that. Hence, the 49 years going on 50 years of constant dividend increases. I don't think anybody's expecting, a high growth coming out of this company. However, I do think that the management has a couple of options and levers that they can pull, to stimulate some growth and even start, either, in the future, some spin-off businesses, assuming these growth, stories turn out accordingly. And I think that'll be interesting to kind of pay attention to, even if you're not a Altria shareholder over the next, 10 years. The most alarming reason as to why a lot of people are staying on the sidelines, with the exception of, the moral standpoint of investing in tobacco, and that is the fact that Altria has roughly $13 billion worth of debt. However, being someone who generally does not like to, invest in companies that have a lot of debt, I am making an exception on Altria. Now, Altria is mainly focused, the reason why I'm going to, kind of ignore the fact of the amount of debt it has is because of a couple of reasons. One, its cash flow, I believe, is one of the most stable cash flow businesses, out there. I think that, when you get people that start smoking cigarettes, I think that it's generally, standard to assume that once someone is, say, a designated smoker, regardless of what goes on in the economy, regardless of what goes on, at their job, they're going to find a way to buy their cigarettes. So I'm assuming that within, say, a 5 to 10% fluctuation of free cash flow that's coming into the company, I think that's going to maintain, over the next 5-10 years without really any question. And if that happens, I think that, the debt burden and, their current cost on their debt is going to be, managed just fine by the company. It trades at about 14 multiple, at least for the amount of money that they take in and compared to the amount of money that they owe in their debt on a yearly basis. So I'm not really worried about that. And also, if you say looked at this from a business standpoint and the company needed to pay off their debt as soon as possible for some reason, if Altria, say, were to cut its dividend, which obviously no one would like to see, it would be able to pay off its debt in full in roughly 4 to 6 years. And that just kind of goes off of, one, how much money they put into dividends, and two, with the amount of money that they're experiencing, it's still not really that big of a deal for the amount of debt they have, in my opinion, because it's a staple, it's a consumer staple, and they don't really have to worry about the cycles of the market, say, as the rest of the companies in the S&P do. So I think that's relatively interesting and just kind of something I wanted to point out. Now, getting into the valuation of the company, there are a couple of ways that I decided to do rough metrics on the company. So the first one I'm going to be looking at is Peter Lynch's inverted PEG analysis. Now, so this analysis, and you can read about it in most of his books, is focused around taking the PEG, obviously it's the price to earnings divided by the earnings growth, and that gives you a number, and anything under 1 is technically undervalued, and anything over 1 is technically overvalued or near full valued into what their future growth is going to be. But for companies that, like, say, are, in their mature state or in their dying state, Peter Lynch generally likes to do a different type of formula, and that is because these companies have, they generally focus on, providing dividends to their shareholders. And Peter Lynch kind of looked at it as like, well, you could get Coca-Cola, and, Coca-Cola is going to look like it's going to have a PEG of, 2 to 3 all the time, but it's paying a really, really safe dividend, and it's definitely not 3 times overvalued, at least at the time that he was doing his analysis. So he started to do something, and it's you take the earnings growth that you expect the company to experience, say, over the next 5 years, you take their dividend the dividend yield that you expect to be paid, from the current share price over the next 5 years. You add them together, and then you divide that by the PE ratio. So it's kind of the inverted PEG ratio. And the way he says is that, okay, so if you get a 1, then there is some value in the company. And anything over 1.5 is like a bargain that you should really be looking for. If you can get anything that has a 2, just start loading up on that company, because it's something that, when you do out the math and you think about what the actual return to the shareholder is going to be, it's trading at a significant discount, the higher that number is. So currently, right now, if you look at the EPS growth of approximately 11% for Altria with a 6% dividend yield and currently trading at a 13.8 PE, you only get right now about a 1.23 ratio. And so that means that it is, it's fairly undervalued, not necessarily like at a big discount, but it's definitely, compared to the majority of other companies out there, it is more on the undervalued side than overvalued side from this standpoint. Now, if you look at the discounted EBITDA metric, and now that's just looking at 5 years, I gave it a 15% discount rate, and looking at the current rate of the market and everything like that, it kind of came out to about $15 a share, and a couple of cents. If you use a discounted cash flow based off their net income, it comes out to about $57 a share. And if you do a discounted free cash flow, this is mainly such a drastically different number due to the amount of debt, the amount of money that the company has been focused on paying towards their debt over the past couple of years. That depresses depresses the value down to about $28 a share. So those are a couple of different models that I just kind of looked at, ballpark, what are the different ranges that this company could be trading for. Now, say, obviously, the most conservative one, and for people that are like really looking for a deep value investment, I definitely would think that you probably wouldn't be started to invest in Altria until it hits about the $30 range, 20, the low 30s, mid 20s would be a place that you, say if you really wanted a very, very steep discount into whatever company you're going to be going into. I think that would be about pretty fair, because I think the discounted free cash flow assumption model is going to be, the most conservative metric, especially with the numbers that I was using. And there were a couple of things that I want to talk about for the kind of the story going along with the company as to like what could potentially, change those numbers and, provide future growth for the company going forward. So the first one being Juul. So Juul is actually a company that a lot of people thought were going to, contribute to bankrupting Altria. So Juul, obviously, I'm sure most of you know, they make that vape that looks like a flash drive. It's super sleek. I refer to it as the Apple of vapes, because everybody that I've seen that has had one, or anybody that's been in the vicinity of it, always talks about how cool it looks. And they talk about like, oh, I don't smoke tobacco, but that's a really cool device, things like that. This is also the biggest device I've seen current smokers actually switch to when they switch to, from traditional forms of cigarettes into e-cigarettes. And that's mainly because the draw is relatively similar, the strength of nicotine is just about the same, and there are a lot of flavors that relate directly to, currently people that currently smoke tobacco. So I think that Juul is in a very, unique spot right now. Its pricing is significantly cheaper than, say, a standard pack of cigarettes, but it still has a pretty strong revenue cycle that it takes its consumer from, buying the unit to, say, then buying pods, and each pod is roughly the equivalent in nicotine standpoint as a pack of cigarettes. But the main difference is that you buy a pack of 4 pods for Juul, and it's, between $15 and $20. And you get 4 packs, or if you buy individual packs of cigarettes, you're looking at paying $11 per pack. And so obviously you're saving a lot of money, if you're a smoker and, say you lose your job or whatever, or, the economy is getting really hard. I think a lot of people are going to attempt to switch over to Juul. And so when you hear that, you definitely think that, okay, maybe Juul's going to be taking away a lot of market share away from Altria and other cigarette manufacturers, which is true. And Juul has actually seen its revenue growth, explode over the past couple of years. This company is only a couple of years old, but it already now trades at a $15 billion valuation, and it is currently making over $1 billion a year as of this year. So Juul is definitely, no joking matter in this space, and it's definitely by far, it holds, I believe, over 80% of the e-cigarette market. Juul is by far, the prime industry leader in the e-cigarette space. And now Altria has announced that they are in talks to acquire a minority stake. So if you've been paying attention to the news in relation to this, Altria is talking to the executives of Juul, and they are talking about acquiring, a portion of the company, anywhere between 20 and 40% of the company as of right now, and they are probably going to be working in a way to be, say, having somewhat of a deal over the next few years to, say, buy a majority stake. So I personally think that if this deal goes through for a minority share, I think over the next, say, 10 years, whenever there's hard times or whenever whenever anything goes wrong, say, for these two companies, I think Altria is then going to increase its stake to being the majority shareholder and or just buying up the company straight out. And I think that will allow, Altria to kind of, give up on all of their e-cigarettes that definitely haven't been, performing that well compared to any of the small vaping companies or, even just the other cigarette companies, and allow them to have, the most premium product in this new emerging market. And I definitely think that in the future, the majority of people that are going to, say, start smoking for the first time are going to be, vapors. They're not going to be cigarette smokers. They're going to be looking at products like Juul, and that's where they're going to attempt to, get their entrance into this space. And so if you look at this company from a valuation standpoint, they are trading for about $15 billion, and they're taking in over $1 billion each year. So obviously, trading at 15 times revenue isn't really necessarily a good bargain. However, I do think it's small enough of a position that Altria could start it and, experience some decent ROI off of the company. But the main thing, I think, is that they're going to need to fully acquire Juul in the future, and they will kind of solidify, their leader in anything that has to do with nicotine, not just necessarily the cigarette market. Now, the next big thing that I think is going to be a possible growth driver for Altria is that they have confirmed to buy a $1.8 billion stake in Cronos Group. And so this kind of allows Altria, over the next, say, decade or so, to really have the abilities to have the deepest pockets and the most comparable, product line into the up-and-coming marijuana space. So if you look at, say, Altria, and you look at how they're in almost every convenience store, they're in almost every, supermarket, anything that, can sell a cigarette, Altria Marlboros are there in the United States. They have about a 45% market share of that whole space. And to say if you're able to start buying tobacco cigarettes there, chances are you're going to be able to start to buy, joints and marijuana cigarettes there. And I think they're just going to plop in a green Marlboro box that has marijuana cigarettes in it, and bada bing, bada boom, you have, the best pricing power. You have the best marketing team, for smokables on your side in the U.S., and I think that that's just kind of the direction that Altria is going to be going into. I think the marijuana industry is going to be huge. I definitely think that, this acquisition, in terms of like what the company actually does and what they've currently produced in the past, they probably overpaid for it because the majority of the marijuana sector is relatively overvalued. However, I think, and essentially, this is just easier for the company that already knew they were going to have to get into the marijuana space eventually. They essentially were able to, just buy a startup, not have to go through all the headache of, figuring out a management team and doing all that. They essentially bought $1.8 billion of a already existing company, and they have the ability to become a majority shareholder in the foreseeable future if they want to. So I imagine that if the marijuana, investment bubble pops, Altria is going to, execute their ability to, say, take a 55% ownership of the company and, just pretty much use them as a subsidiary of Altria and just move on from there. So I definitely think that this is, while they could have gotten a better price for it, I think for what it's worth, this is a smart, investment. I think in 10 years from now, if Altria really wants to get into the marijuana business, they'll be making much more than what they've paid for Cronos Group, per year, maybe even per quarter. And so I am definitely, as someone who, is looking at this from business investment, not necessarily, as a way to make money, because definitely the Altria investment philosophy is not going to be done overnight. And I think it's going to take, easily 5+ years to really unlock any value. I think that this is a relatively smart way for the company to get into the marijuana space without necessarily having to be the manufacturer of the marijuana. Obviously, because of federal laws and everything like that, the company has to go through a lot more loops being the size of it is, as opposed to, a company that already went through all that and just, say, buying their way into it. So that's kind of it. I definitely think that these are ways that Altria can grow in the future. And something else I really wanted to make mention of, and so this kind of relates to the British American tobacco stake, but also with Juul and also with Altria, because it relates to all of them, is the talked about menthol ban in from the FDA in the cigarette space. And now, if you guys aren't really paying attention to the rest of the space, you don't really have to pay attention to this. But if you look at all of the tobacco players, especially British American Tobacco, but Altria also got hit by it, they all dropped substantially when this news came out. and you looked at British American Tobacco dropped about 20%, I believe, the day that this came out. And everybody's freaking out that, okay, these companies are going to now lose all of that revenue. Now, there are a couple of... So what the headlines say is that, okay, the FDA is going to ban, menthol and mint cigarettes, and you're not going to be able to buy them. And, those people are, they're going to stop smoking cigarettes because they can only, smoke menthols because they only want to smoke menthols and things like that. And I have a couple of issues with that. One being that if you, say, have someone who's a smoker and they smoke menthols and they stop having the ability to buy menthols, I'm going to bet that those people are just going to switch to regular cigarettes. And that's going to be a higher chance of that happening than it is that they actually quit smoking because they cannot buy a menthol cigarettes. So my father has been smoking cigarettes for 40 years or so, and he actually, due to the brand that he liked a while ago, went out of business, and he just immediately switched to standard smoking. He was like, yeah, it was annoying for a couple of weeks, but, after a couple of weeks you get used to it, and, life goes on. So when you look at it, so I personally don't think that their revenue loss would really, be that important anyways. When you look into it, it's not actually a flat-out ban on these flavors. It is a ban of, say, them being sold at a Cumberland Farms or a Shell gas station. You can still buy all of these brands at any place that would have a minimum age requirement to enter the store of 18. So if you look at any liquor store, if you look at any designated smoke shop, or if you look at any other facility that only wants to focus on adult customers, you can still sell all these products. You can also still sell all these products online and different things like that. And all in all it's going to do is it's going to change the smoker or the end customer from what location they have to go in order to get their cigarettes. Now, there is also talk about limiting the amount of nicotine in each cigarette, and I personally think, again, that's not going to do much except to make the person buy more cigarettes. That's the fact of the matter. And so this is just kind of a quick thing. If you guys want, I can do a full, look into this FDA link. I'll link to this down in the comment in the description below, and you guys can kind of read it. But if you go down to, after all of the talk of what the FDA said that they wanted to really get into, and then you go into what they actually said about, like, enacting and regarding the framework, it's not nearly as bad as people are making it out to seem, at least from my eyes. Who knows? You guys might have a different opinion. But that's kind of it. And so that's why with British American Tobacco, people are pricing in that they're about to lose, 40 to 55% of their revenue in the U.S. because, they own Newports and the majority of their cigarette sales are from menthols. I personally do not see them losing that. I see them losing at most half of what people are pricing in. So I would say they lose, say, 15 to 20% of it. And that's if people don't switch to, say, Camels or a non-menthol based cigarette that they currently own. But I also, one, don't see this happening for a while, and two, I think it would be, if every smoke shop just started to say sell Newports in it after this gets enlisted, I think you're just going to have smokers, go down the street to the smoke shop instead of buying them from, Cumberland Farms. So that's about it. Hope you guys liked this video. Hope you guys got some use out of it. Let me know what you guys think about the tobacco space and, the marijuana space and the e-cigarette space down in the comment section down below. Hope you guys like this. Thank you guys for watching to the end. Let me know what you guys think in the comment section down below. And I'll catch you guys in the next video. Peace.